Hey, this is Aaron Price, the CEO of Tech United New Jersey. Great to be back live with you. I am here today with a special guest, one of the very first people who I met in the tech community in the New York, New Jersey area. Dave Sorin is the partner and chair of venture capital emerging growth practice at McCarter English. Dave, good to see you. How are you?
I'm doing great, Aaron. It's great to be with you again today.
So I'm in our studio in Jersey City. Where are you headquartered these days?
Well, like so many of us, I am remote for the last almost 15 months, which is just mind-boggling to me. So right now, I'm in my home in Manalapan, New Jersey, and when I'm not here, I am at my home on the beach.
That's awesome. The good places to be. All Jersey, all the way,
Indeed.
right?
Absolutely.
So for those of you watching on the various social media, if you drop a comment, if you have a question, I will try to weave it into the narrative. We're going to cover a variety of topics. Let's start with the early stage founder questions. We're going to probably jump to SPACs, crypto, nifties, and maybe a few other things in between. But we have a strong audience in the early stage founder community. What's the number one thing you see founders get wrong from a legal perspective?
The number one thing, and there are probably 5 or 6 that I would identify as key target areas, but I think one of the most serious issues that we see is when there are multiple founders and they don't carefully consider what the equity allocation among those founders should be. You know, when you're starting a company, it's very easy to get into the mode of, we're all in this together, we're equal partners, so we're going to share equity equally. And while sometimes that's the case, more often than not, equality is not the right answer. And that the equity allocation should be more carefully considered to include items such as relative contributions, relative importance, who the investors are going to be relying on to accomplish the goals of the company. So I think it really does warrant a careful discussion. It's often a hard discussion to have among co-founders, but I think it is very important.
It's a lot easier to have that discussion early on when everything's just kind of pie in the sky. It's a little trickier when there's more real dollars at stake. What about founder vesting right out of the gate? Because a lot of times in the first round, investors will have you then re-up if you haven't been vesting. I've made some of the mistakes you're starting to talk about already now myself. Do you encourage founders to vest? Do you think it should be a 3 or 4 year vesting cycle? And or do they wait till they raise around and punt?
Yeah, I don't recommend punting on the issue. I do think that founder vesting is a critical aspect to be considered at formation or at the issuance of the founder equity. We know why investors think it's important, because they want to make sure that the people on whom they are relying to get the job done are handcuffed appropriately. But it's really important for founders as well, because if you don't have vesting and a founder either needs to leave or you want them to leave, you don't want them to go off with this fully vested, potentially large slug of equity. You then have a free rider, of course, and even more important, when you have to fill the lost skill set, you're undoubtedly going to need to equitize the replacement. And unless you have a mechanism at least to get back the unvested portion, there could be significant dilution to the remaining founders.
Yeah, absolutely. So, I think we could probably spend the entire time talking just about early stage founder issues. Maybe we'll come back to some of those a little, but let's bounce around a little bit. Really interesting year in the SPAC community. I know you've been doing a lot of this work. So first, if you could, in a nutshell, share with people what a SPAC is, what a de-SPAC is, how these mechanisms work, and what you're seeing in that market.
The acronym SPAC is Special Purpose Acquisition Corporation. It is a corporation formed specifically to do acquisitions. There are 2 types. There are SPACs that have what we call blank check authority given to the company to acquire whatever it would like to acquire. And those are more problematic, obviously, because there's so much uncertainty associated with them. And then there are SPACs like one I was just engaged on this morning that knows exactly the industry sector, has already identified the targets, and the targets want to be acquired. SPACs have a very powerful place in the ecosystem. Certainly, recent history demonstrates the reemergence of SPACs, and frankly, even at a much larger level than ever before. Some of the SPAC transactions are running into hundreds of millions of dollars, if not more. The one we got engaged on this morning is a $400 million deal. But it's fair to be warned. We saw a lot of SPAC activity, a little bit of drop-off recently, and the SEC coming out and making a statement that it's going to be looking more closely at SPACs. It reminds me a little bit of the cryptocurrency craze that existed a couple of years ago, when many of the transactions really were not viable ones. That's what you have to worry about in SPACs as well. Obviously, the kind of SPAC transactions that we are working on involve real acquisitions, real promoters of these acquisitions. But it is important to, as with anything else, do it right and be careful about what you're doing, and make sure that you're in it for the right reasons.
It's interesting you bring up that point about reminding you of the early crypto issues that were coming up when companies were issuing their own tokens and some raising significant fortunes. People encouraged me to raise a token or to issue a token around the meetup and Propelify, and we spent some time looking into this space. For those who are looking at a SPAC now, whether it's on the investment side to be acquisitive, or if they think it's an interesting way to have a liquidity event for their company, let's start with the investor side. Who should be interested in this as a vehicle for putting their money to work?
Well, that's a great question. Obviously, you have to think about both institutional and retail or individual investors. When we're talking about institutional investors, they tend to be, specific as to industry sector or technology sector, et cetera. They tend to be very sophisticated investors. So, like the SEC, I worry less about institutional investors when we're talking about SPAC transactions than I do about individual or retail investors. Retail investors need to be careful. We've seen this in the startup community, where sometimes there's this sort of frothy, irrational exuberance on the part of individuals. Certainly we saw that with cryptocurrencies, a couple to 3 years ago. Generally speaking, what I have found in the course of my career is that over time, when something that seems to be new is introduced, and you have that initial exuberance, sometimes less than appropriate transactions, the market tends to correct itself. And we're certainly seeing that in the crypto world today. We all know what happened a couple of years ago, and then there was retrenchment, decline in values. But in the last year or so, there's been dramatic increase in interest again. And we're seeing, companies that, are more appropriately suited, and hope investors that are more appropriately suited. Back when the market took a big dive back in 2008, there was a lot of talk about some people should not be investment classes, and it's all about risk reward and your tolerance for risk and your ability to accept the risks. Because startups, crypto, SPACs, these tend to be high-reward transactions. And so my advice to anyone is a portfolio is obviously and important, but how much you go into certain alternative investment classes, whether it's crypto, tokens, SPACs, for example, you have to consider your financial wherewithal to take the law.
Yeah. I also want to give a shout out to my friend Anthony DiCataldo, who's texted me a picture of how good we look right now. So Anthony, good to have you watching. When you think about the maturity of the crypto space, we've seen an explosion here. Do you think? And I know that you've handled some of these transactions. What do you think the future is for crypto? We just came off the backs of Elon Musk talking about Dogecoin on SNL, which usually triggers like a major cultural shift, right? We've got mass awareness around some of these things. Bitcoin's obviously blown up in the last year, especially in the last decade. Where do you think this industry's headed?
I believe this industry is part of the future and a very important part of the future. But I think it's going to take longer to become ubiquitous than others might expect. And this is true for blockchain as well. I think blockchain has amazing disruptive power, and therefore crypto, which not technically a subset of blockchain, but is empowered by blockchain. I believe the disruptive power is enormous. I think we're going to see dramatic shifts in the supply chain. I think we're going to see dramatic shifts in how capital is raised and the availability of both capital for companies that need it and the investment opportunity for individuals. It's certainly going to be more democratized than ever before, but I don't think it's as short-term as we might otherwise expect. I do think it's a major cultural shift for people, and I think that it will take a relatively significant amount of time for it to really become ubiquitous.
Yeah. I mean, the other thing that it's been very popular, even in just the last few months, is a non-fungible token. And I don't know if you saw Gary Vee's announced a new conference and some offerings around NFTs. We've seen some really incredible pricing around some of these digital assets. Maybe let's start again with, for those who aren't aware, what is an NFT? And then what are you seeing happen here, and what should people be aware of?
I'm so glad you raised this. This is a very exciting development, if you will, as a lawyer, but also as someone who's interested in economic trends. NFTs are basically blockchain-empowered marketplaces for digital assets. These digital assets employ the blockchain for trading purposes, for authentication, for ownership, etc. I'm working on a deal right now with a Los Angeles-based company that is working with renowned musicians who are creating digital versions and seeking to monetize by selling interests in their digital selves. It's absolutely fascinating. We're working on that right now, but it is by no means limited to the entertainment industry. We're seeing this happen in this sort of digital asset creation, somewhat akin to the securitization of mortgages, that we heard about so much in the past. We're basically empowering investment in large assets that historically individuals could not participate in. So we're seeing this in ways to finance and invest in real estate. We're working on a transaction that involves NFTs for fine art. Owning a Picasso is something that is not within the financial wherewithal of most investors, but NFTs and digital assets and this kind of securitization allows people to play in an asset class like fine art. There's a company in Israel that is doing this in the diamond industry. And it's securitizing an asset in a digital format. We like to think that this is brand new. but it really is analogous to the securitizations of the past.
So when should someone who's interested in crypto, interested in an NFT, when do they call you?
Well, good question. If you're an investor, don't call me. Call your investment advisor. I personally believe that a well-diversified portfolio should include a reasonable alternative assets, including crypto. My own investment portfolio includes that now as well. Obviously, how big or small a stake you take as an investor depends on, again, your financial abilities to bear the loss and what your risk-reward tolerance may be. If you're a company working on this and you're considering some form of tokenization or the creation of digital assets, you come to us early. Just like the many issues we talk about with startup founders in the non-digital asset world, getting it right early is very important. And so we would encourage you to speak with us at the time that you're contemplating some form of digital asset as part of your underlying business process. And certainly you want to be talking to the professionals who help create the instruments and the tradability of those instruments.
Dave, I know we're almost out of time here, but you deal so much in the VC world. What are some of the trends that you're seeing? And I'm curious what you're seeing change in pandemic deals that started in pandemic times versus what would happen pre-pandemic.
I am amazed at the resiliency of the startup community and certainly of the venture capital community. 14, 15 months ago when the world went down as a result of the pandemic, there was a lot of uncertainty. And for a brief period, lasted no more than 2 to 3 months, we saw some frustration on the part of capital raisers. We saw venture capital funds concentrate on portfolio. There were deals that died at the beginning of the pandemic, other deals that saw some downward valuation pressure and increasing emphasis on investor-friendly provisions. And that went away so quickly, and even more quickly than I anticipated. Certainly by late spring of 20, the summer, things really seemed to normalize. In fact, as is always the case, there are winners and losers depending upon the circumstances, the geopolitical circumstances, technology, etc. So needless to say, anything that was event-oriented tended, or travel and entertainment, hospitality, tended to suffer, while anything dealing with health or remote health, digital provisioning of medical services, that exploded. It was interesting to me, LPs, that investment funds, hardly up. Our venture clients that were in capital raising mode were very successful in their capital raising efforts over the last year. And it's been so interesting to see how many deals are now done totally remotely. We all went remote, let's call it mid-March of 20. My team has done over 200 venture capital transactions since that time. Every single one of those that started after remote work came into being, they were all done where the VC and the entrepreneur or the founders hadn't even met in person. And so the change in meeting the way you and I are meeting right now, Aaron, and the acceptance of that started pre-COVID. That was a trend that clearly was in process. And the pandemic put a spotlight on it and certainly accelerated that trend dramatically. We did a transaction that, I was shocked it was totally remote, where we were representing a change management company in California that was selling itself to a Fortune 500 company. Not a single time did anybody meet in person from the very beginning of that. And obviously all the negotiations, all the documentation, all the diligence meetings occurred just like we're speaking to each other right now. And it was, it is a whole new world. And, look, I don't think this is a permanent replacement for meeting in person. We are social animals. Meeting in person has an edge, certainly, over meeting remotely. So there will be in-person meetings again very soon. But
Agreed.
We will not be meeting in person nearly at the frequency we did before. This is far more productive. When I have a meeting in New York, for example, or with a New York client, traveling back and forth, at that time, I can have 5 meetings on Zoom or some other digital capability like Microsoft Teams in the same time that I used to be able to have 1 meeting. And I believe the workforce is going to change. I don't believe we're all going to be in our offices, from early morning to late at night. There will be a lot more flexibility.
Yeah, agreed. Esther, nice to see you as always. I mean, Dave, last question before we wrap here, which I think you teed up nicely, which is New Jersey. What is the opportunity for New Jersey now coming out of the pandemic? Because I believe with what you just mentioned, right, people sometimes complain about crossing the river from New York, or it's a big state. If you're taking a meeting intrastate, you may have heard me talk about the opportunity that I think we have now to leverage technology to work together a little bit more easily locally. I wonder what you think is the opportunity for us now, and together we've seen a real maturation in the region from the startup community. Where do you think we're going, and what's our opportunity?
I think the opportunities are limitless, and I am really excited about it. Aaron, you and I long ago talked about issues, like the dearth of early stage venture capital interest in the state. This has proven that place matters less than ever before. Companies now have an opportunity to recruit talent wherever it may reside. New Jersey is very fortunate. We have a very highly educated workforce. We have incredible technical and scientific capability in the state. But this is an enhancement for any company that locates here. And, on the investor side, investors are less concerned about being there physically and looking over their portfolio, because technology enables us to be connected without necessarily being taken over the state.
Well, unfortunately, we're out of time, but I always enjoy talking with you. I really appreciate your support recently, and really, you were one of the very first people to sit me down and say, "Yeah, I think you're onto something here, and we want to be a part of it." And I'm forever grateful for that. So, if we were in person, we do a lot of
likewise, Aaron. We are all grateful to you and the excitement and the passion and the ideas that you have brought to the state, really bringing us to another level. It's a wonderful thing to see.
Well, we're in it together. I appreciate that, Dave. We've come a long way here.
Pleasure.
So normally, if we were in person, I would do the high five with you here, but instead, high five the camera with me on the count of 3. 1, 2, 3. Boom! Good to see you. Hope to see you in person real soon.
Likewise, my friend.